All right, so we've got the three stages, three not too big, three stages, right, of investing, right? So what this is going to look like is quite honestly, this is exactly happening right now. But there's three stages of what I call an intestinal intestinal fortitude, fortitude, right? Okay. So first up is you need to be absolutely crazy enough, uh, crazy enough to actually put your money into something has doesn't have 100% certainty, right? So that's aspect one. Let's bring this out here. So, your money, right? Which is crazy. Like there's a certain level of crazy that you need to have in order to actually start anything, right? To put anything in there, right? So you take your money bag and you say, you know what? I'm going to take a percentage of this and I'm going to put it down on the Russian roulette wheel here, right? So we got red, right? Red, black, red, black, red, black, and then we got green, right? And then we got black, right? So black, 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 and this is the roulette game goes, right? So we get this, right? Just this wonderful special gambling tool, right? So you are taking a gamble at first, and we'll see what happens after that, right? So people often think, "Oh, that's so crazy! You got into this, asset or something, and now it's doing well. You're so lucky, right?" But let's talk about that a little bit more, right? So this is always going to be step one. Now, there are things that go into this beforehand, right? So you might be doing your research, right? And the research is fantastic because what it does is it closes the gap between the risk, right, and it brings it up to education, right? So probability here. So this would mean that, whoops, it's really difficult to see. I kind of see it like this, right? So the this way down, that's the delta that you have in terms of your risk profile, right? This is like, hey, uh, I have no idea what I'm investing in right here, right? No idea. And that means my percentage chances of success are very low, right? Super low. But then if I spend some time and I do some education, then I start leveling up to the probability, right? So this is like the education threshold, right? Right, because I can't go any further than understanding the risks, the rewards, right? So the rewards, the risks, right? And then also maybe fundamentals, right? So the fundamentals are really all about timeline, right? So this is time, right? Time, it's a clock, right? So timeline, right? So this is kind of this whole equation right here is sort of like a recipe for a thesis, right? This is this is how you develop and form an investment thesis, right? So, for instance, you could say, I think in 10 years, by 2030, the market cap to this is going to equal 10 trillion. And right now it is currently at 500 billion, right? So that could be your thesis in terms of timeline. Then you kind of adjust accordingly, kind of try to understand these different possibilities. But there is 100% the risk or the craziness factor, which is here, which is you really don't know. This is the uncertainty. Right? So you hope that your bet is asymmetrical, right? Which means that the potential upside, which is actually slightly different than this thing here, um, it would equal this, right? So it could go to 0, could go to 100. You kind of, let's say 100x just to be silly, right? We want to try to make bets in here versus bets, you know, maybe 50-50, right? 50-50 is okay, but you need to make sure that your fundamentals check out with, this type of bet, and then maybe you have a bigger picture, right? So you have maybe like a portfolio with correlations that you want to make sure kind of work properly with one another and move different directions, different time frames. Maybe you're a passive investor. Anyways, the list does go on, but let's get back to the three stages of any investment, right? So number one, you got to be crazy, right? You got to have some courage, right? You got to have your courage to get in there, to get in the game, right? To have exposure. Right? So step two gets interesting because once you do have exposure, then you need to have some conviction, right? Or as I like to call it, you need to have yeah, you need to basically have some intestinal fortitude, right? Because you've made a commitment somewhere along this line that you've kind of decided, right? Somewhere in the chart, you said, here, I'm starting right here, right? And then as time goes on, you say, oh, this is amazing, it's in the green. And then all of a sudden, boom, right, goes into the red. Here, you're going to be feeling like you want to die, right? Right? Or if you really, 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 really feel confident with the education you've done, the research you've done, and the probability of it working long term, you're going to say, you know what, I can actually double down, right? I want to buy more when it gets lower. That's how certain I am that this is a good bet, and I have the allocations to do it, and this is my thing. So increasing your exposure like that in the portfolio. So that's kind of exciting, right? And then let's say, you know what, it starts to kind of continue upwards again, right? Right, like this, and like this, and like this. This whole time, regardless of who you are, you're going to have varying levels of gut punch, right? So this whole range, you're going to feel good here, you're going to feel bad here, and the more experienced you are, the less these affect you, and also the more balanced in your exposure, uh, the better you'll feel too. So, for instance, if you have 1% of your portfolio, you know, be this whole fiasco over here, you're not even gonna pay any attention to it. So you're gonna be a happy camper, right? But if it's 99% of your portfolio, so the rest of it, you're going to be like very concerned the whole time. You're going to have a lot of you have to have a lot of conviction to stomach that what people call volatility, right? So that's kind of the batch for step one and step two. So intestinal fortitude, and then what we'll do is we'll do this. We'll shrink this a little bit so that we have some more space here to keep working, but we can also still see this. And we'll do that. We'll do that. Yeah, just like that. Cool. Uh, okay, great. And then I need to change the background a little bit. And the way we do it is like that. Perfect. All right, cool. So the last bit is the last bit is regret. So step three is regret, right? So you've been crazy enough to have the courage to get the position, right? So courage, right? Position. Then you've had the conviction for intestinal fortitude to get hit in the stomach a bunch of times. And then on your way out, this is your exit for your position, whether it's in 10 years or whether it's in 10 days or whatever it is, those matter dramatically. But the takeaway here is that no matter where you sell, no matter where you sell on your your chart here, whether this goes up here and you sell here, let's redraw it over here. Let's do this color again, right? So this is your map. Let's say you start here. Let's say it goes down here, goes here, goes here, goes here, goes here, goes here, goes here, right? All these different directions. If you sell, let's say you exit up here, right? And you're like, this is amazing. I've increased my profits by, let's say, 60%. And you're feeling like a champion. But then 2 months later, you see that it goes up to here, and you missed out on a move that would have, let's say 7x your money, right? So 7x would be what, 600%? I don't know, whatever it is, right? So let's say, bam, 7x. You're gonna feel like the feeling of this is that you lost about, you lost, let's say this is just to keep things simple, right? 2x, right? So 2x to 7x, you're going to feel like you lost 5x. That's going to be the sensation, right? And that's not fun, but at the same time, you will live to fight another day. Now, there's another world where it goes up to here, and you say, "Oh no, no, no! Like, man, shoot, I missed that." And then you'll say, "Oh wait," but it comes back down to here, and you say, "Oh man, I'm out of here. This thing is never going back up. I'm freaking out. Let's bail." Right? So you bail here at the bottom. That's called capitulation. Fancy word. Fancy word for you lost your cool. You're bouncing out of the thing. You try to cut losses, right? So you take maybe like a 50% hit, right? So you just lost 50% of your money. That's not a happy place either, but that might feel a little bit better than missing out on 5x, simply because you might feel like you still have control, right? So you have control over your money. So you pull your money out and you're like, no, 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 money is so important. Fiat dollars are really important. This asset isn't as important. So just to give you an example, there is a certain way where this can drive you mad, and market makers, so people who own a lot of the liquidity in the marketplace, can basically manipulate people's emotions by raising it up and dropping it down, raising it up, dropping it down, and there's different patterns that this is called, like Wyckoff distribution, all kinds of others. But the long and short of it is, your stages here are always going to be the same, right? So you got crazy, which is number one. You got conviction, right? Number two, right? Number two, and then you have regret, right? You can interchange some words here, but let's just stick to those. So no matter where you sell, you're going to have that. One of these might be commitment, right? So anyways, this would be three C's, right? Keep it on brand, I guess, right? Three C's of investing. So there's a heads up into the marketplace. I hope you enjoy that.